This is 7 o'clock. I woke up as early as then. I've already hit take profit. I already hit take profit in this trade from yesterday. So wow, this is amazing. This is from my notion, as you can see. Enter this trade from this other block right here. I'm just smashed TP. I this low here at 30354. So this is a win. This is a win trade. So so we can go over what I wanted to say. So it was a sell, and I think I'm still going to do a rundown of what I was expecting in the price. But I did wake up in the morning around so this was the trade. So let me see. So our account balance now is, we made $198 from the trade. $198 from trading just the accounts, the first trade on the account. So we are up almost 2%. So it was just a quick 1:2 trade. That's $200. That's what we were aiming for the trade. So I woke up by 5 a.m. and I'm back to studying the charts, just like I told you. We're watching some ICT videos, and yes, this is one of the amazing stuff about watching. So now I'm just gonna get ready to I'm going to be visiting that place I normally visit for study and using the Wi-Fi. I'm off today as well from work, so I'm just gonna get all the things I need to do done at home here, and then we get ready to go there. So sit back, relax, and enjoy the video. So
hi guys, welcome back to another video. Welcome back to my channel. My name is Forex, and I'm documenting my Forex trading journey here on YouTube. So if it's the first time, please do well to like and subscribe to the channel. So yeah, like I said the other time, we are going to be watching some of ICT content and doing some back testing this month. And yeah, I woke up at 5 a.m. this morning. I did my studies. I watched Market Maker series, the first episode of it, and yeah, after that I did my scriptures reading, and then I headed out to, should I say, stay out and study and review some trades that I've taken over the week. Found out that I've been taking some silly losses because of silly mistakes and having to rewatch some of the ICT content. I found out that the same mistake I've been making for a while now is trading against the trend. Okay, taking trades that are counter trend to the general trend of the market, and that came as a point of, should I say, trying to chase the market, or trying to put my human bias instead of the daily bias of the market, or instead of what the market is telling me, I'm trying to do what my mind is telling me. So let's just go over the trades we took this morning. I woke up to a green trade, and some of the trades I think that I've been repeating some of the mistakes over and over again. So looking at this GBP USD, I was already forecasting it. So it was one of all these quick trades that I'm always should I say fun to excited to take. So as you can see, we entered from this fair value gap and then price smashed down. So this was where we entered this trade. So we've not finished with the journaling. So the confirmation was a sweep of the previous section high. That's, we swept London section high, and then we got a displacement, then we got a shift in market structure, then we got an FVG, then we did an OTE. We also got a change in state of delivery, and then retracement to the FVG. That was entry time frame. So this trade was literally yesterday that I entered the trade, which was on Tuesday, but take profit was hit earlier this morning. So we're going to be documenting it as 15th or 16th. So let's take just 16th. So entry time frame, you guys know my entry time frame is normally 1 hour time frame at the rest. So trade type, This is a continuation trade. Then session was London Keyzone was actually what smashed the TP. So RR we just went for 1:2 RR. So next risk we're going to be risking just 1%. So day of the week, so it was literally today is Wednesday. So entry style we use low risk entry, which is the fair value gap. So that's what we use. So outcome is a win. So let's just go over the trades. I took some losses this week and this month. So first of all, yeah, this was the loss. So like I was telling you guys, imputing your own bias into the markets is something that is going to come back at you. So I think my mistake here is putting and forcing my own belief here into the markets without a daily confirmation of the reversal. Okay, so you guys know that should I say my invalidation level and my validation level are always in the daily time frame. So whenever I get a break in market structure in the daily time frame, that's when I look towards to say that okay, we've changed in bias, or we're going downtrend, or we're going uptrend. So should I say I was actually forcing my bias into the market, and as you can see here, I was taken out. But do you guys know that before this trade here happened, this particular trade, as you can see, I took a buy at this fair value gap, wanting to continue the bullish trend that we have been on USD chef. But once I took this buy, I don't know what came over me. I was like, no, we are reversing this, that, and I went and take a sell, and that was why I was taken out here. Then referring it back to the buy here. So referring it back to the buy, you'll see where I entered this trade. See, I did enter this trade here and exited it manually. So these are kind of, should I say, bringing back old habits that you, should I say, let go of. And you see that these are the bad habits that continuously bring to your losses. Just like my mentor said that there are some of the non-negotiable things you've done so far that have gotten you to some levels, but you think that you can leave them. But the truth is that you still have to hold on to them for you to be able to continue to grow to one level to another. Okay, so that's one thing I learned again from that. So if we should go back to, as you can see, we use the continuation checklist and everything aligned, but should I say all over my head, going back to the forecast, you see that going back to the forecast here, I was hoping for internal range to external range liquidity from the weekly time frame. And also, since price was expanding so much, I was expecting price to come up to this level, and then for us to do a little bit retracement back into the internal range for us to continue to the upside. Then looking at this in the 4-hour time frame, I don't know why the network is kind of slow here. So I was expecting price to do a retracement back for us to continue to the upside. I missed this particular trade. Price still did this. I was not even able to capitalize on this. Like, it just seems that I was a little bit carried away a lot this week, and yeah, it's made me to, should I say, reconsider studying my charts again and getting back into routine. So right now, I think I'm just gonna do a little bit study while I'm waiting for what I'm waiting for to occur, and then I think that's all for today. So I'm just gonna get a little bit snacks and do the rest of the study. Sit back, relax, and enjoy the video. Okay, peace. From the GBP/USD, you guys know that the CPI was actually what smashed the trade down. So in USD, euro dollar, we're looking at from the daily. So I can clear all these guys. You guys can see what I'm looking forward to in price while I'm doing other work and checking up some trades. So we saw that price has been in a very, very bearish momentum, which some of the losses I've taken was trying to do a retracement back into internal range, but price has constantly been pushing down, and this is the only bullish candle we have so far. And now I've taken out this swing low, so we're waiting for another retracement into internal range. So we know that this is a long, big, good draw on liquidity, which price just smashed. We also have this inefficiency right here, which price will still come to your price R. So after this inefficiency, going down to the 4-hour time frame. So first of all, what are we looking at? We're looking at the trend. So you can see that we're in a long bearish trend right here, and we still have this inefficiency to go forward to. So we took out this low, price did a swing high, we did another break below this low. So right here we have this tiny mitigation block. With every little bounce in the markets, we are leaving up a mitigation block, and the mitigation block is what we're looking for to price retracing back into, and then should I say bouncing back from. So you have this tiny FEG as we're looking into this, we have this tiny FG. So you can see price has manipulated to the upside, which is today's candle, manipulated up and hit this candle. So using the classic market structure OTE from the previous day high to the previous day low, we're having OTE and also we're having this fair value gap. Price is already at the equilibrium price level, so going down to the 1 hour, price is really not clean on the 1 hour because of the lots of consolidation. So we have this consolidation, price took out sell stop, still going for buy stop at this fair value gap. So at the end of the day, we're looking forward to another sell, probably from, let's just say, this OTE. So we're taking it at the between the equilibrium and the OTE level, so the 0.5 and the 0.61 level. So that's what we're looking forward to. So expecting another expansion down into this inefficiency in the daily time frame, and also coming for the external range liquidity right here. So we're going to be leveraging this as external range liquidity right here. So I think right now I'm just going to go into the mall and get some refreshments so we can actually go back down to the park, because literally this is not really where I wanted to stay and do some work. But I was actually hoping to do something and wait for a friend here while I do some things going on. So I just think I'm just going to go to the mall. So the mall is just around. Entered the trade right now, so let's just see why we go on with our day and see what price has for us today. This has to be one of my best pastries in the place I work. So literally, yeah, they don't really know what I do for a living, what I do. So I just head over there to get some pastries, and I'm heading to the workplace where I'm going to do some more. Not minding that I'm eating and bad habits. So sit back, relax, and enjoy the video. Okay? Yes. I just arrived at the second position. It should just be like position humping, but I know you guys are familiar with this place. So I'm just gonna stay here and do some little work before I head home and check up on the USD trade. Price did a little bit retracement back to our entry again, but I think price is already back down, so we're still up $50, and yeah, so just gonna stay here, do some work, and probably head home and do a little bit. If I'm bit tapey, we'll do a little bit journaling of the trade. I think that's all. We just got to the place, and as you can see how price is smashing down the profit. Price is smashing down the profit, so I'm just going to stay while the trade runs. I think that's literally just it. And now I think I have this video to predict. GBP is and then USD. Today is all good forever. Alright guys, I'm heading home now, so I got some car. So the trade is still running here, so if I should get home I'll check it. Yeah, I think that was all for today. But I think we're just a little bit towards TP, but we've not hit TP yet. So if I get home, if I've hit TP, I'll journal the trade and then just sleep and get ready for tomorrow. I just came home now and we just hit TP on the trade. So right now I'm just gonna copy and journal the trade so we can see. Copy. Going over to our ocean.
TP. It means entry style is low risk entry. Day of the day is Wednesday. 1%, I risked 1%, 1:2. Section was New York section. Trade type, it was a continuation. Forecast, I will later try. Entry time frame is 1 hour. Date, today is 16th. So confirmation, we got a sweep of the previous session high, sweep, got a change in state of delivery, we got a displacement, we got a shift in market structure, we got OT retracement to FUG. That's confluences for the trade. So TP, and right here icon, we put it green. I'm going over to this. So these are the trades we've taken so far in the month, and yeah, the losses we've taken. So thank you so much for sticking to this extent.